Good morning, everyone. Today's date, Monday, March 16th, 2015. Time 10:41 in the morning. I'm Brian Fox, Chief Analyst here at Options XO, giving you today's daily market update. If we take a look at today's announcements, so far we have already in the morning Swiss franc announcements on PPI monthly and retail sales year on year. Negative results there, but if we take a look back on Friday, you can see some of Friday's results if you missed that. Preliminary consumer sentiment report coming out 92.1 underneath 95.6, as well as negative results in unemployment rate and positive result in employment change. However, negative result on employment rate is 6.8% under above 6.7% here for the Canadian dollar. We also see negative result here on revised industrial production monthly and the Japanese yen, so that's still taking effect later on today, as well as we have announcements for housing market index on the dollar, leading index for the pound, industrial production for dollar, capacity utilization rate, and also foreign security purchases for the Canadian dollar. We take a look at the quote list so far. Biggest losers so far, WTI crude position and oil is going down negative 0.49%. Also, dollar franc headed downstairs, gold headed downstairs, as well as dollar Canadian and Australian Canadian dollar. Dollar yen now we see in the gaining here. So that's on the border. We take a look at biggest gains today. So far, Euro Australian dollar 0.65%, New Zealand US dollar 0.61%, and pound yen 0.45%. Take a look at the charts here. So far, Dow Jones down 17,749 as we see compared to earlier this month. However, it's a big gain so far today compared to where it was earlier last week. Last week, we see touched along the 646, now it's 749. DAX headed up high, 12,000 above, and FTSE 100, 6,744. 74. Pound dollar at 1.4783 heading downstairs. You also see dollar yen heading downstairs at 121.34. And Euro USD on a 4-hour uptrend here, 1.0534. Gold at 1157.24 and silver at 15.65. Big stories coming out of Bloomberg so far. What's the economic impact about the QE stimulus program of President Draghi for the ECB? So far, they're saying it's really the only possible strongest case for the better economy in Europe is the euro weakening. And this has to do with, overall the amount of money that President Draghi is injecting into the stimulus, which is about 60 billion euros a month. Overall, adding up to 1.1 trillion euros. That's about 1.2 trillion US dollars. We also see a lot of bad sentiment about the negotiations between Greece and the ECB in regards to the national debt that they currently owe to the ECB. Here's a quote. They've got a lot of hubris and arrogance being in the situation they're in and making all these demands, said Mueller, 49, waiting for fares near Brandenburg Gate. He's a Berlin cab driver. Jens Mueller, maybe it's better for Greece to just leave the euro. Now, that would obviously be very bad for Greece if they left the euro. However, we could see the sentiment overall against Greece because of the negotiations that Alexis Tsipras is having with the ECB, head of the anti-austerity group, and their whole movement is to try and negotiate as much as they can for the renegotiations of debt. Last but not least, here's a graph of declining rigs versus rising production in oil as we see so far this year. We see this is 2012, January 2012 to 2013, 2014, 2015. We see the huge drop in rigs as a result of late last year, and we see still the increasing amount of barrels per day. What can explain this? Well, what's happening is that large oil rigs and oil companies like ExxonMobil, Shell, Dutch, they're consuming a lot of the smaller rigs in the competition because of the fact that these smaller rigs can't sustain the cost structure that's currently in place right now, being that oil is at $44 a barrel. It's very, very difficult to make revenue, and in fact, a lot of companies are simply selling their assets and liquidating their companies. So what's happening is there's a huge decline in rig production because the amount of rigs that are actually on the market are not what it used to be. However, the major oil companies that are producing most of the oil are still in production. So we see that there are less rigs on the market. However, still the amount of barrels are being produced because of simply the supply of the amount of oil that's on the market at the moment. That's today's daily market update. I'm your host, Ryan Fox, Chief Analyst here at Options XO. Take care, folks. Have a great week and happy trading.